What is going on, everyone, and welcome back to Explain the Charts. Today is October 1st, 2025, and we have a fascinating and somewhat contradictory picture for Bitcoin. On one hand, we're hearing about a shocking collapse in the US dollar and fears of a government shutdown, which could send assets like Bitcoin soaring. On the other hand, some analysts are warning that the bull cycle may have already topped out. Predictions are all over the place, from a slide back towards $100,000 to an explosive rally to $200,000 by the end of the year. In this video, we're going to cut through the noise by looking at both the latest news and a deep dive into the BTC charts to figure out what's really happening. First, let's talk about the macroeconomic environment because it's setting a very bullish stage for Bitcoin. The US dollar is on track for its worst year since 1973, having lost a staggering 10% of its value so far this year. This currency debasement is a powerful tailwind for assets that are seen as a store of value, like gold and, of course, Bitcoin. Adding fuel to the fire, the Federal Reserve has been cutting interest rates, which historically pushes capital into riskier assets. We're also facing a potential U.S. government shutdown, which creates massive uncertainty and could halt the release of key economic data. Analysts suggest this uncertainty often drives investors towards non-sovereign assets, and many see any potential dips from a shutdown as buy opportunities. Beyond the U.S., there's talk of massive money printing in Europe to cover budget deficits, further strengthening the case for Bitcoin as a global hedge. On the adoption front, the news is incredibly positive. President Trump's administration created a U.S. strategic Bitcoin reserve back in March, and this is leading to what some are calling nation-state FOMO as other countries consider doing the same. Major players like BlackRock and Vanguard continue to push deeper into crypto with new ETF products, bringing more institutional capital into the space. So with this bullish backdrop, why isn't the price already at new all-time highs? Well, analyst opinions are sharply divided. The bulls are calling for a massive end-of-year rally, pointing to the October seasonal trend and targeting price levels of $145,000 or even $200,000. However, a more cautious camp believes the bull cycle that started in late 2023 may have already peaked around the $125,000 mark earlier this year. They see the current price action as a necessary consolidation or corrective phase before the next major move. Now, let's turn to the charts to see what the price action itself is telling us. Here we are on the daily chart for BTCUSD, and we're looking at all the data since May of 2024. As you can see, it's been a massive uptrend, especially the explosive move that began in November 2024, taking us well past the $100,000 psychological level. However, the most critical feature on this chart is the peak we hit on July 14th of this year, right around $123,200. This is our current all-time high and serves as the most significant resistance level for bulls to overcome. Since that peak, the price has been in a clear corrective pattern, which aligns with the more cautious analyst outlooks we just discussed. Price pulled back significantly, finding what has now become a crucial support zone between $108,000 and $110,000. This support has been tested multiple times, notably in late August and again just last week at the end of September. Let's zoom in on the price action since that July high to get a better look at this range. Now viewing the daily chart from July 1st, 2025 onward, you can clearly see the battle that's been raging for the past 3 months. We have the major resistance overhead from the $123,000 high and this strong floor of support down at $108,000. The price has been caught in this wide channel, making a series of lower highs, which is a textbook sign of a market in consolidation or deciding on its next direction. The longer price holds above $108,000, the more this looks like a healthy consolidation before another leg up. But a break below would signal that the bears have taken control, at least in the medium term. To understand the most recent price action, let's switch to a lower time frame. We're now looking at the 1-hour chart, focusing on the last week of September. This view really highlights the volatility that the news was talking about. We can see the sharp drop on September 25th, where the price plunged from over $113,000 all the way down to test that critical support near $108,000. But look at the immediate and powerful bounce from that level. That sharp V-shaped recovery shows immense buying pressure and demand in that $108,000 zone, confirming its importance as a line in the sand for bulls. Following that bounce, we saw a strong rally over the next few days, pushing price right back up towards the $114,000 area. Now, let's zoom in one last time to the 15-minute chart to see exactly what happened at the end of the month. On the 15-minute chart for September 30th, we can see the late-day rally that took us from around $113,000 to highs near $114,500. This matches the news reports of a late rally into the close of the month. However, in the final hours, the price couldn't hold those highs and began to drift back down, closing the month just under $114,000. This shows us that while buyers are defending support, sellers are still active at these higher levels, leading to the current state of indecision. Now let's go back to the daily chart to put this all together for our final analysis. So, with the bullish macro news clashing with a chart stuck in a multi-month consolidation, what are the key levels and potential outcomes we should be watching for? First, let's recap the most important price levels. Our critical support is the zone between $108,000 and $110,000. This is the floor of the entire recent structure. Our immediate resistance is the range we've been rejected from recently, around $115,000 to $118,000. The ultimate resistance and bullish confirmation level is, of course, the all-time high around $123,000. Now for the potential scenarios. The bullish case. Given the strong macro tailwinds like the weakening dollar, I would give this a 50% probability in the medium term. For this to play out, we first need to see a decisive break and hold above the $118,000 resistance area. That would signal a shift in market structure and open the door for a retest of the $123,000 all-time high. A break of that high would enter price discovery, with the next logical resistance targets being the on-chain levels mentioned in the news at $138,000 and the Analyst target of $145,000. The bearish case. I see this as about a 30% probability. The major warning sign would be a daily candle closing decisively below the $108,000 support level. Such a breakdown would invalidate the current support structure and likely lead to a much deeper correction. The first target for bears would be the psychological $100,000 level, with a further slide to the $90,000 to $95,000 zone possible, as this was a previous area of strong consolidation. The sideways/neutral case. In the immediate short term, this is the most likely scenario, with about a 70% probability. The market will likely continue to chop around inside this broad $108,000 to $118,000 range. Traders will be looking for a catalyst, such as news related to the government shutdown, weak jobs data, or another major institutional announcement. This range-bound action offers opportunities for short-term traders, but long-term investors are likely waiting for a confirmed breakout or breakdown. To summarize, keep your eyes on these key levels: support at $108,000 and resistance at $118,000 and $123,000. The direction Bitcoin takes from this consolidation range will likely set the trend for the remainder of 2025 and determine whether October lives up to its name. That's our deep dive on BTCUSD for today. If you found this analysis helpful, please hit that like button, subscribe to the channel, and let me know your price targets in the comments below. Thanks for watching Explain the Charts, and we'll see you in the next one.